All right, we are back. Money, Markets, and Mayhem. I am your host, Mark. There is my Instagram handle. Please give us a follow. And if you get value from this video today, I would love for you to subscribe. It helps me more than you guys know. So we're going to be talking geopolitics and macro and the implications on that on your investment portfolios, where the opportunities are, and what you should be looking at today. I filmed this podcast yesterday. My memory card ran out, and so I only got half of it done. I didn't feel like the podcast was as good as it could have been. I'm glad I have to refilm it today because in 24 hours, so much has happened, and I think it adds to the context and the picture of what you guys need to know. So you may have seen the news, you may have seen markets rip, gold rip, miners rip on the news that Trumpy is tacoing once again. Guys, what I want you to understand and be clear of is the Americans' ability to battle and fight a war are solely dependent on their ability to keep interest rates low. So as soon as the bond market screams no mas and starts to rise, Americans lose the ability to fight that war any further. I think what you're seeing in the last 24 and 48 hours from Trump trying to taco is his administration, his Treasury Secretary, whoever it is, saying, we can't do this anymore. If the bond market fails, we can't go to war. We're a toothless tiger. I want you guys to listen to what I just said. The Americans' ability to fight a war in 2026 and beyond basically depends on their ability to keep interest rates low. And they have proven last year, 2025, when Trump tried the tariffs, and again now trying to go to war with Iran, that they cannot fight a sustained war. And I'm going to break that down for you and explain exactly why it's happening. But let's listen. Before I do that, let's listen to what Trumpy boy has said in the last 24 to 48 hours.
We've won this. This war has been won.
One.
The only one that likes to keep it going is the fake news. I mean, the New York Times, you read the New York Times, it's like...
My friends, it's not the fake news that are keeping this war going. It's the Iranians' resiliency and their backup from China, Russia, missile production, intel data, and their ability to put pressure on the bond market. That is what is keeping this news going.
We're not winning a war where they have no Navy and they have no Air Force and they have no nothing. And we literally have planes flying over Tehran.
Look at this guy.
And other parts of their country. They can't do a thing about it. For instance, if I want to take down that power plant, that very big, powerful power plant, they can't do a thing about it. It's like, take me. That's all they can do. And yet, if you read the New York Times or if you watch ABC fake news or NBC fake news, you'd say it's a close battle. It's not a close battle.
All right, and then then there was another video here. This was Iran has given them a present.
Do you think I trust them? I don't trust them.
Then why bother talking to them?
Because they're going to make a deal. They're going to make a deal. They did something yesterday that was amazing, actually. They gave us a present.
They gave us a present.
And the present arrived today. And it was a very big present worth a tremendous amount of money. And I'm not going to tell you what that present is, but it was a very significant prize.
Prize, yeah. Guys, listen, look, meanwhile, they're putting out caution for Americans in the Middle East, right? They're sending troops over. Guys, this war is all about bonds. It's all about the bond market. You're seeing the president of India come out. You're seeing the ex-president. You're seeing the president of France. You're seeing all these people come out and try and say that we're de-escalating. Javier Blas, the author of The World on Sale, amazing book that I think everyone should read. Trump, we've won this war. Trump, I think we can say this is regime change. Trump, Iran leaders are all different. It's like they're firing arrows just trying to see which one hits. They're moving the targets as they go because they cannot push forward while the bond market doesn't allow them to. This is interesting. Again from Javier Blas, the White House is truly winning the oil jawboning battle against Iran. Still to be seen if Trump would win the physical oil market war. But to see Brent trading at sub 100 a barrel and WI below 90 after 25 days of Hormuz is almost full closure is surreal. That is one of the interesting things, that Trump has the ability to put out a press conference and markets can rip off the back of it. The fact that they've been able to keep oil relatively low is actually a win. It's actually a win. And I think that Iran and China's strategy is to try and crash the bond market. So one final slide, and this was, just recently posted from Arthur Hayes. Markets are smoking a fuck ton of hopium right now. Of course, I want the killer to stop, but I'm not a fan of buying risk here. I think more and more people are starting to realize what's going on, and I'm going to explain a concept called, I'm going to talk about the 1956 Suez Crisis and how there's parallels to this today with the relation to the Americans. Okay? And I'll go into why bonds are so important in a second. If you haven't heard of the Suez moment, Luke Gromen has been talking about this a lot recently, that this could be America's Suez moment. So what happened in 1956 in the original Suez Crisis? So in late October, early November 1956, Britain and France and Israel invaded Egypt to seize control of the Suez Canal after Egypt's president nationalized it. Militarily, the coalition made quick gains. However, the United States under President Eisenhower strongly opposed the invasion for geopolitical reasons. Avoiding alienated the Arab nations during the Cold War and protecting its own influence. The US applied financial pressure instead of direct military confrontation. The British pound sterling came under massive speculative attack. The UK lost huge amounts of dollar and gold reserves defending the fixed exchange rate around $2.80 per pound. Official losses were reported at 279 million in 1 week alone, but actual drains, including swaps and US Treasury bond sales for window dressing, were higher, up to 360 million in days. The US blocked Britain's access to IMF loans and threatened to sell large holdings of British government securities, which would have crashed the pound further and risked devaluation or default-like conditions. Oil supplies were disrupted, the canal was closed, raising costs and worsening the balance of payments pressure. Britain had no military defeat on the ground. Parallel, America hasn't had a military defeat on the ground in Iran, but the sterling financing crisis forced a humiliating ceasefire, sounds familiar, and full withdrawal by December 1956. The event is widely seen as the symbolic end of the Britain as an independent global superpower, its Suez moment. The modern analogy, America's Suez moment. Today's version flips the roles. The US is now the heavily indebted superpower. Debt to GDP is 125%. It was 35% in the 70s in the first oil crisis. Trillions in annual refinancing. Its ability to project power or sustain prolonged conflicts isn't limited by battlefield losses, but the US Treasury bond market. Higher bond yields, especially the 10 and 30-year Treasuries, mean sharply higher interest costs on the massive debt, stock, and new issuance. Remember, we're in fiscal dominance right now, where it's not private sector debt, it's public sector. The debt is being financed at the lower end. Okay, crowding out fiscal space for defensive war spending, stimulus, and other priorities. Risk of foreign holders, Japan, China, selling treasuries to cover their own energy import deficits. So you're seeing this at the moment, right? People are going to have to raise dollars to buy gold, to buy yuan, to trade for oil. And I'll explain that further in a minute. But remember that if yields break out higher amid geopolitical shocks, inflation from energy, foreign selling, the US faces a self-imposed constraint. It can't easily afford endless deficit-funded wars without printing money, inflation risk, or cutting elsewhere. The bond market, not the battlefield, becomes the decider, just as the sterling did for Britain. Okay? So current bond yields, you can see that this is the problem. This is what is causing Trump the issue and why you're hearing talk of a ceasefire, because bond yields are rising. This is the US 30-year. This is a longer-term view, right? They must have technical guys within their administration, and I know Bessent understands this to a T. Scott Bessent's role used to be on the other side to try and make money from the government, to try and push the government. One of his most famous trades is shorting the British pound, and they made billions on that trade. And so now he's on the other side trying to protect the US government from these trades. So they understand when these levels get to a critical level where bang, they could really fly, all of a sudden you see these tacos every single time. Look at the US 10-year bond. It's just rising, rising, rising. And we'll talk about Luke Gromen. Luke Gromen has amazing takes on it. You should watch this video. He says ultimately gold goes higher, and I'll explain why that is in a minute. But so you can understand exactly where the problem lies, right? This is how the US government has been funding itself by issuing US treasuries, short-term treasuries. And as that rate rises, it becomes more expensive to finance the government. The interest repayments crowd everything out and make it too expensive. Now, you either have debt go out of control, you have a devalue in US dollar, but your position becomes substantially weaker. 3 weeks ago, Luke said, we saw Trump's worst case scenario outcome for the Iran war as a US 1956 Suez moment. Today, the Suez moment is quickly becoming Trump's best case outcome. So a retreat and the Americans no longer being a superpower, and they go along on their way without a bond crisis, without a 2008 COVID crisis combined, without massive hyperinflation, right? These are all the other scenarios now that become possible, okay? Now they're getting pushed to the brink. So their best case scenario is a Suez moment now. Now what Luke's saying is the scenario that we saw 3 weeks ago as a tail risk, worst case scenario from the Iran war, is quickly becoming the best possible outcome. In our view, the US now faces a choice of, number one, withdraw, give Iran what they want, which will be interpreted globally as strategic defeat that accelerates multipolarity, which likely features gold as the world's neutral reserve asset, which requires a much higher gold price. Two, keep on the current path and force Trump and Besson to choose between A, allowing US Treasury yields to spike sharply higher, which will send the US true interest expense, I just mentioned that, far above federal receipts. So the interest repayments become more than the government is earning from tax receipts, etc. Note that we are already sitting at 104% of receipts through February, and spiking yields would drive the TI sharply higher and receipts sharply lower. This choice would likely mean US up, everything else down for the next few weeks or months. So if they kept pushing on this part, if Trump escalates, if Trump pushes on this and bond yields continue to rise, what will happen is the US dollar will rise with it and everything else will crash as investors have to sell whatever they can to meet their margin calls and to pay the higher freight for oil. That would be everything else down for the next few weeks or months until investors begin bidding up gold sharply, quickly taking it back to all new all-time highs. So once they realize the America is kaput and the debt spiral is going to go out of control, everyone will then sell everything they can to put it into gold, because the higher that those rates go, the more chance of contagion and global crash. And that's when people will go to the safe haven asset. Okay? They will bid up gold sharply, quickly taken back to New York time highs and beyond on what would be a serious global sovereign debt and then global banking system insolvency fears, like what we saw in 2008. Okay, 2008, 2020, gold sold off. Then when people realized how bad things were going to get, everyone bought gold. Or B, they move into yield curve control or its functional equivalent to contain spiking UST yields, which will then spur a spike in gold, oil, commodities, Bitcoin, and equities altogether as the USD falls sharply to the new cycle lows. This is what I think will happen. Maybe they allow a crisis short term, but eventually then what will happen is there'll be some form of yield curve control, and that won't look like, hey, we're doing yield curve control. That'll look like we're buying these kind of bonds, we're creating this kind of facility to buy bonds, and they will try and drip feed and slowly add liquidity into the system. Once they give that signal that they are going to backstop bonds or keep yields artificially suppressed, i.e. yield curve control, once they give that signal, and I'll be watching for that, that is when it'll be time to buy commodities, to buy Bitcoin. Bitcoin will be the fastest horse, and obviously equities and everything will go up as well, because what that will be is a drip feeding of liquidity. I don't think they'll do a big massive print. The only way we see a big massive print is if they really allow yields to spike, the contagion spreads, and we see that global banking system insolvency. I don't think they'll allow it to get to that. I think they've had too many goes at this where they realize how bad that is, and they'll put the brakes on sooner, or they'll come up with some sort of alphabet letter soup acronym, ABC something something yield curve, this, that, buying that kind of ABC treasury, like they'll come up with something. It won't be QE, but it'll be something not QE, right? And that's when you've got the signal to start buying Bitcoin. So let's see. What we need to see as investors is how far do they push this in the short term? Do they make everything sell off because they don't understand what they're doing, or Trump gets pushed into escalating for whatever reason? Or do they retreat and start to add liquidity back to the system, start to try and get yields down? It's all about bonds, guys. It's all about bonds. And what you guys need to be looking at is this chart here, the MOVE index, right? On TradingView. Look at that spike from down around the 60s to 103. This was the 2008 crisis. This was the COVID spike, and this was the Russia-Ukraine spike, right? And you could say that these proxy wars keep happening to put pressure on the bond market. That is the plan of Russia, China, Iran. They know that they don't need to beat America militarily. They only need to push bond volatility and make bonds spike. I hope I've explained why now. Okay, so if anyone out there still thinks that America can go and be the global policeman, that is fanciful. That is fantasy. It's not going to happen. It cannot happen anymore. They don't have the ability to do that because their debt is just way, way, way too high. And the rest of the world knows that. And that's why they are pushing towards gold. That's why these other countries are pushing towards gold. All right, it's time to take money, markets, and mayhem to the next level. The number one way that I think I can do that is to bring the most credible, the most experienced, and the most knowledgeable macro voices in the world on the show. In order for me to do that, I just need one small favor from you. I need you to go below and hit the subscribe button. As crazy as it sounds, the more subscribers, the more guests are willing to come on the show. I want to play a short video before I explain why Iran has been effective in this war with the help of China, with the help of Russia. I'm going to go through some of the main points as to why they've been effective. I already spoke in a couple of episodes back that Trump, in the episode when I said Trump has started something that he cannot finish, and the interceptors versus the ballistic missiles. But let me show you the deeper play and what the goals of the regime, the Iranian, Chinese, Russian regime. So Iran's Strait of Hormuz strategy seems more about trying to break the petrodollar than spiking oil prices. And this is true. And we've spoken about this with the bonds. But now let's get deep into what their play is.
Have you ever seen a traffic jam that could crash the world economy? This is the Strait of Hormuz. Right now, hundreds of massive oil tankers are sitting motionless in the water, waiting on a single decision from Iran. These ships carry 20% of the world's oil, but they are being held back by a new kind of invisible gate. Iran is reportedly demanding that any ship passing through must pay for its cargo in Chinese yuan instead of US dollars. For most of these tankers, this is a system error. Their entire financial network is built on the dollar, and switching to the yuan takes time that the world doesn't have. Every day these ships sit still, the cost of oil rises and insurance premiums skyrocket. It's not just a physical blockade, it's a financial one. If the ships don't move soon, the petrodollar system that has powered the world for 50 years might finally reach its breaking.
And that's what's happening, guys. We are reaching that breaking point where the petrodollar system is morphing into a petro-gold system. But I just want to make some key points. So a lot of people saying the Strait of Hormuz is closed. It's not closed. It's been reorganized under Iranian control. So Iran now decides on who passes on what terms and what currency, as you're starting to see. So pre-war, 77 ships per week, now as low as 4 for Western shipping. But Iranian crude is still flowing at 2 million barrels per day, which is nearly 3/4 of all the oil leaving the Gulf since March. Non-Iranian cargoes collapsed from 14 million barrels a day to 400,000. The oil market, as we spoke about before, Trump has done an amazing job keeping oil prices as low as what they are, because this is a significant thing. And I don't think the market is yet pricing in where oil should be because of the lack of this oil that's getting through. And one of the reasons I think that is because these trades, these spot trades, haven't happened yet. People have already bought their oil. They've already got their contracts in place. What you're going to start seeing now is you're going to start seeing countries trade for oil at ridiculous prices. You're already seeing the bifurcation between like Oman and UAE oil versus US oil. So the physical oil market and the spot market will slowly creep higher. Okay, and when that does, then it will probably filter across to oil prices as well, unless Trump can pull off the ultimate jawboning, the ultimate taco, the ultimate soft power display of convincing everyone to go bullish again, or they start yield curve control. But I think the market is starting to cotton on. So Javier Blas again at Bloomberg confirmed that Iran is exporting 1.5 million barrels of crude during the war, and that's 2.5 billion in revenue to Iran didn't expect entering the war. And they're also at a 46-year high in output. So Iran is continuing to make money through this war. It's actually making they're actually making more money. They're actually shipping more oil because the oil that they have is now more in demand, right? And so Iran is actually making money. And even if Trump was to go in and take Karg Island, I think that would be I think the Iranians are ready for that. I think if they were to take Karg, the Iranians still have 5 other little islands where they could scrape out 500,000 barrels of oil a day and still continue to fund their missiles and the war. But it would also be a bloodbath. I think it would be a bloodbath. It would be like Vietnam going in with boots on the ground. They would probably get destroyed. And I don't know if the American public will be able to accept that. That will be one of the things that breaks. Look, at the moment, I don't think many people in America kind of know what's going on with the war. You know, even people in Australia, speaking to some business people, they have no idea. Right? We're in this. We're watching it each and every day if you're watching this podcast. But a lot of people still don't know what's going on. But if Americans started dying on the ground in Iran, I think that would be very bad. And I don't know. I'd be calling Trump's bluff there. I don't know if he actually wants to send people in. But you don't know. You don't know who's calling the shots. You don't know who's pushing him. So why is Iran so effective? Well, the Chinese chips, sensors, and other parts and assemblies have arrived. Assembly and deployment of replacements has commenced. As long as Gulf oil keeps being paid for in yuan, Iran will never run out of ammunition. So as long as Iran is shipping those 1.5 million barrels of oil a day, they are earning money and they can keep buying ammunitions from China. And there's a massive amount of underground networks and tunnels in Iran that allows them to receive parts, supply chain goods, to manufacture the missiles and then to send them and cause havoc, right? So on the Petro-Yuan, Iran proposed earlier on in the war that we'll let shits through if you pay for them in yuan. And so what they're basically doing, the Petro-Yuan is already in effect in the Strait of Hormuz. It's like a toll booth. Up next, China suggests to the GCC to sell all their energy in Petro-Yuan. They get free Hormuz passage. China opens Shanghai Gold Exchange vaults, co-custody by Iran and GCC. Iran and GCC are then able to convert their yuan supplies and silver in gold. So this is what I think will happen. I think eventually these GCC countries, etc., will side with Iran. They'll start trading in yuan and gold. And people will say, oh, well, we don't want our gold custodied in Shanghai. So China will allow vaults to be opened in the UAE, and you'll be able to trade yuan for gold in these vaults in Shanghai, in the UAE. And what I think you're going to see is these nations start to side with China, because America can no longer guarantee their security, as you are seeing. Another reason why they've become why Iran has been effective, There was reports that they fired a missile at Diego Garcia, ballistic missiles that they weren't supposed to have. If they've got a missile that can reach Diego Garcia, that means they've got missiles that can reach Rome, Kosovo, Greece, Egypt, etc. That's not great. That's not great. And Luke Roman posted this. He said, one of the charms of Trump is that he will sometimes tell you what is really happening if you read between the lines. For example, here, he all but told us the real reason Hormuz isn't open yet. I would think interception reaction times in the Strait would likely be much shorter. So let's watch the video.
Are you encouraging our allies in the Gulf to be more involved in the Iran operation?
Yeah, I mean, a little bit, but more NATO. I think our Gulf allies have been pretty good, to be honest with you. UAE's been hit so hard. He got hit by 1,400 rockets, shot them all out of the air with our great Patriot missiles. Think of it, they shot 100 missiles at one of our aircraft carriers, the Abraham Lincoln, one of the biggest ships in the world, actually. And out of 101 missiles shot, every single one of them was knocked down in the sea. Think of that. Think of what that means. 101 missiles, highly sophisticated, very fast missiles shot. Out of 101, all 101 were shot down, and now, for the most part, lie at the bottom of the sea. And pretty amazing, right? Pretty amazing. Our military is amazing, Pete. You know the attack I'm talking about recently? 101 shot. I said, wow. I saw that. You can see we have sort of pretty good equipment that we see. It's called the red line. Those red lines were thick, right? And I said, that's a lot. And then we saw them one by one just get shot. And these guys that do the shooting are the coolest cucumbers ever. You know, most people, you don't have a lot of time. When a missile's going at 2,500 miles an hour, I don't care how far away it is, you don't have a lot of time. But I watched them sit down and think. Great students, MITs, a lot of MITs, a lot of guys like this. They're not as much into the muscle as they are this one right here. And amazing to watch them perform under great pressure, because they have a matter of seconds to do it. If they don't do it properly, it's a big problem, you know, because these were powerful. These were very powerful missiles coming. And so a lot of people choke. They don't choke. These guys don't choke. They're the best in the world. We have the best in the world.
So Trump is basically telling you how effective Iran is with those missiles. And we spoke about it in the previous episode. Trump has started something he cannot finish, that the cost asymmetry to produce these missiles and drones, 30 to 100,000 to 200,000 versus $1 million per interceptor, it doesn't work. Long term, it doesn't work. This is the reason they cannot ensure the safety of the Strait, because they don't have enough interceptors to shoot down all these missiles, right? I just don't think they do. The bullish Trump case, if those who think Trump's going to keep going out and wiping the floor with Iran, would suggest that the reason they need a 1 month ceasefire is to restock, right? Because they probably don't have the stock to continue to shoot down these missiles, so they're probably carting us out of there. The rules of engagement have changed. You no longer need to fire nukes. You just have to be a nuisance enough to be able to crash the bond market, as you can see. We spoke earlier about the possible scenarios at play, what the choices are at the moment. How do we play it? Well, here's a little matrix. If there is a successful withdrawal, gold surges as a neutral reserve asset. Equities volatile but trend down on lost prestige. Oil stabilizes lower, USD softer. So today, the reaction that we're seeing is gold and gold miners up based on the withdrawal. Now, the question is, will that take off straight away? Or will there be an escalation? Will there be a successful ceasefire? Or will Iran now push the matter further? If I'm Iran and I've pushed this far, if I'm China and I've pushed this far, I keep pushing. So I don't think it's time just yet. But, you know, gold and gold miners have sold off. There's some pretty significant discounts right? Like, let's have a quick look. This is your Australian miners. You can see that they've had a significant sell-off. They've attempted to bounce. Some of them are up 5 to 8% today, but they're still in a downtrend, right? This could just be a bear market bounce. The bear market bounces tend to be more vicious than the bull market bounces, right? Bear market bounces are always more vicious. So you're seeing that the large miners here in Oz are still under their trend line. So do you want to start bidding them up? Yes, maybe you do. Maybe you want to start building a position on miners in here, but I'm not sure it's time just yet. You know, initially, oil sold off on this news. You know, your oil companies here in Australia, Woodside, sold off, but now it's starting to bounce again because I think the market is smoking a little bit of crack. Like Arthur Hayes said, I still think oil prices are going to go higher. I still think this war has crossed the Rubicon now where you can't just pull out and taco, you know, because if Iran keeps exerting pressure, they can squeeze prices up higher. They can disrupt things more and they can push bonds a little bit further. So, you know, I actually added some short-term call options on Woodside today because I think this sell-off was an opportunity. But let's see if I'm right. I'm trying to be cute here. I'm trying to be real cute and I'm trying to time it. But these are the things that I'm looking at. Okay, so escalation and yield spike. So this is if the US goes back and escalates, if Iran comes back and escalates, if there's no peace or ceasefire or ceasefire agreed, short term, USD up, stocks, bonds, commodities down hard, and then gold rips on the debt crisis narrative because as those yields start to rise, you're going to see that you're going to see Wall Street, you're going to see all the traders start to lose hopium and start to come face to face with the reality of what is actually about to happen. If that, like I said, if that happens, it's tactically there will be tactical US dollar strength and it's risk off for everything else. Okay, until it gets so dire that people start piling into gold. All right, so if yields break that 4.5 to 5% danger zone, either way, you avoid long-term bonds. And then the second or the last scenario is if you start to hear or you start to see the US administration signal some kind of yield curve control, Fed capping yields or adding soft liquidity, that's the inflation trade. That's when you'll start to see gold up, you'll see oil up, you'll see commodities up, and that's the signal to start buying Bitcoin more aggressively as well. All these things will go up together and you'll start to see the US down. You'll start to see the Aussie dollar do well. You'll start to see the commodity currencies, Canada and Brazil, do well again, which was what was happening prior to this war, okay? And that's where you want your gold, your energy, your Bitcoin, your ETH, etc. That's when you want to start going long, but that isn't there yet. We know where we're going to get to, but we don't know necessarily the path to getting there just yet. I want to show something quickly. This is again a clip from Luke Groneman. I've mentioned him so much today. I subscribe to his tree rings. I subscribe to his reports. It costs me, $5, $6, $7, $10,000 a year, whatever it is. But he's been so on when it comes to calling the shots on this. But I want to explain. This is in relation to the investor consensus at the moment.
It's going to be a crisis that'll be worse than COVID and 08 combined.
Well, sorry, bigger than COVID and what combined?
2008 combined.
2008. Okay, that's all right. All right, that's not a small statement.
No. This
Okay.
people the gap in perception versus reality of this is as big as anything I've seen in my 30 years in research. Like reminds me so much of 4Q07, where what we were hearing on the ground in the seat I was in at the time was so bad that I was calling friends and loved ones saying, make sure you have under $100,000 in the bank under the deposit limits at that time, because there's gonna be a lot of banks failing next year. And at the same time I was making those calls, the S&P 500 was hitting an all-time high. And people were like, oh, everything's fine. And I think this gap in perception versus reality is even wider.
That is the issue at the moment. There's a huge gap between perception and reality. US is on the edge. They are dancing such a fine dance. All Iran needs to do is keep the pressure up. And the US is not going to be able to save the bond market is not going to be able to save the stock market unless they do one of the things that we've been discussing today. And I think the gap in people's perception, people think that it can just be like last year when Trump decided to taco. They're now playing with an unknown. A known unknown is Iran. They're not necessarily going to be like China and say, okay, let's reach a deal. See, China's goal is to slow roll the USA because they know that in 2 years, Trump will be out and they'll deal with the next person. Iran, the US put together 15 points of a ceasefire, and Iran came back and said, we don't want to speak to Trump or Witkoff or whoever your envoy of negotiators are. We want to speak to J.D. Vance. It's not, well, they probably don't trust Trump, but it's not because they don't trust Trump and Witkoff. It's because they know that Trump's gone in a couple of years. They don't need us. They can see through, they can play the long game. They can see through Trump. Okay, all they need to do, they want to speak to Vance because they know he's the one that will be around in 3 years' time. Whereas Trump won't. Trump and his administration won't. So China's game plan is to slow roll them. And if I'm Iran, I'm not backing up here. I'm putting more pressure. I'm exerting maximum pressure here, right? So I still think the market hasn't caught up, and I still am not going long risk yet. I'm not jumping in yet. I might play Bitcoin short term, things like that. But at the moment, my biggest positions are still oil positions, oil companies, call options on oil companies. That's what I'm playing at the moment. There'll come a time where I need to get out of those, but I'm up, 200 to 300% on some of my call options that I put on before the war, because you could see this happening. Woodside is a position I've had before the war. And I've lost some money on my gold positions. I've lost money on my HODL Bitcoin stack. I had some sideways chop trading and stuff. And so I think you can still be patient. You can still be patient here. So let's go through a couple of the assets that I like, even though I'm not ready to go full deploy into them. And, maybe if you've got your spots, you've got your levels, you could start nibbling on some of these things, right? Because long term, I think you're going to be fine. But again, we're trying to be really cute here at the moment. Gold, I think you've seen this massive move up from 79 to 23. So that trend line broke after the Ukraine crisis. That trend line broke. That was a 40-year trend line that broke. And so this is a monthly chart. And so what you really want to see is coming back and tagging here, 3.7, or coming back and tagging this trend line at 3,000. That's what you want to see. That's a healthy touch. If it goes below that, then the bull trend is, potentially in doubt. But a tag of that trend line and then a bounce off is what you want to see, right? And so this is something that I'm looking at, buying some physical in and around that 3 to 3.7. I don't know if we're going to be lucky enough to get that for the reasons that I've outlined today, how important gold is in this new regime. But who cares? These are the things that I'm looking at. I only want massive generational entries for big sums of capital. If I'm going to put big sums of capital in spot or physical, then I want the best entries. Everything else, I'll trade via options because it's just a better vehicle to do so. So that's gold. Bitcoin. So Bitcoin's price chart is pretty clear. This is the high. This was that range between November and February where we were trading in that 80 to 100,000 range. When that range broke, we fell down sharply. We're now repeating that pattern. We're trading in a range from 60, 63 to 75. If it breaks above 75, we'll go higher. If it breaks below 64, I think we will go lower. It's as simple as that right now with Bitcoin, right? It's that you have to sometimes let these things come to you. This pattern could go either way. It could go either way. It's too uncertain to put big amounts of money at play until you know which way this pattern breaks. My view is that it's going to break lower. We're going to go down and test 45 to 55, and that's where I'd want to be loading up, okay, because of the things that I've outlined. But you wait for it to come to you. If you're DCAing or you're playing it short term, you want to buy at the lower end of the channel and you want to sell at the higher end of the channel. Very simple stuff. Buy at the lower end, sell at the high. Most people, they chase it at the high, they chase it here, and then they sell it here. do the opposite. If you trade the channel, if you're short term, trade the channel. If not, or DCA in the channel. If you're a DCAer, DCA at the bottom of the channel, not the top of the channel. And if you're waiting for a bigger entry, then be patient. We'll either buy the breakout or we'll buy it lower. Simple as that, right? Simple as that. I do love this chart though. Since the war broke out, it looks like this is Bitcoin versus gold. And Bitcoin looks to have potentially bottomed, double bottom-ish, bottom versus gold, but that has reversed in the last couple of days. I like this chart. I think it's constructive for Bitcoin, but I'm not acting on it just yet. And then the other thing, I've started to really follow Polymarket because smart money has an uncanny way, or people in the know have an uncanny way of making money from that. And one of the cleanest ways to make money is to bet on the prediction markets. And you're starting to see more and more predictions, the predictions rising that are bearish Bitcoin. So Bitcoin is now more likely to crash below 45 than to reclaim 100,000 this year. Kelshi gives a 75% chance Bitcoin falls below 60. Kelshi, how low will Bitcoin get this year? The odds are rising that it gets to 48K. It's rising. But I love this one. This is one of my favorite ones here. This is your final notice by Bitcoin. So someone from the Iranian regime, alongside military bases, those financial entities that finance the US military budget are legitimate targets. So people buying bonds, etc. US Treasury bonds are soaked in Iranians' blood. Purchase them and you purchase a strike on your headquarters and assets. We monitor your portfolios. This is your final notice. So, yeah, I mean, guys, all Iran needs to do is keep putting the pressure on. And that's where you maybe see if people have to escape bonds, hundreds of trillions of dollars in bonds, if they have to escape, they're going to go to gold, probably going to go to stocks, and someone's going to go to Bitcoin. And Bitcoin is only 2 trillion, and you've got hundreds of trillions of dollars that might have to try and escape to get into a $2 trillion asset. All it takes is 2 trillion to get into a $2 trillion asset, and the price doubles overnight. Okay, so eventually Bitcoin is going to go. It is going to go. The path to getting there is the thing that we need to monitor. So a question that I constantly get asked is, Mark, who do you use to buy your Bitcoin and your crypto? What exchange, what brokerage, what platform, etc.? For me, the answer is really simple. It's a company called Stormrake. They're located here in Australia on our shores, operating their offices out of Melbourne. They have over 40 staff with a team of dedicated brokers that can assist you anytime you like. I've got my own broker that I've got on speed dial, and anytime I need to place a bid or get a market update, I just give him a call. You can set up all kinds of accounts, self-managed super funds, trusts, corporate, or even individual. You can have as many accounts as you want. And if you mention the team at Money Markets in Mayhem, they'll set you up same day. So if you want more information, go to www.stormrake.com/MDP. Mention me, and you'll also get a free consultation with a broker, and you'll get a discounted rate on your trading fees. So it's www.stormrake.com/MDP. Enjoy the rest of the show, guys. So copper's sold off hard. Obviously, oil is one of the raw inputs to mining. As oil goes up, mining goes up, becomes more expensive. As inflation goes up, mining becomes more expensive. If you can't get sulfur out of the Middle East, you can't mine for copper. And so a lot of the big copper companies have been hit hard. These are all on my watch list. Mining companies are on my watch list. In Australia, you've got BHP and Rio. They're on my watch list as well. You know, eventually, when the dust settles, pardon the pun, copper is still going to become an important story in the rebuild, and it's still a very important story in the AI advancement. We haven't spoken about AI much, but that story isn't going away, guys. That story isn't going away. You need to consider having your shopping list ready, your AI names ready. You know, I've got my names here on a piece of paper, and I'm monitoring their charts. All right, you want to have your names ready for these worst case scenarios. When it comes to putting spot capital down, when it comes to putting big chunks of money down, I want the best entries. And you see how many names I've got here. So I'll wait until I get the best entries on some of these names. Otherwise, I'm trading. In the short term, everything else is a trade. And I'll use options to express those trades because I can put a bigger bet on, my downside is capped, and I've got higher upside potential. Like I said, one of my oil companies, I'm up 300% depending on the options. And I only risked $30,000 US of capital, right? Whereas if you're buying spot, you're risking way more capital. And so for those spot buyers, I want great entries. I'm still DCAing my money into Bitcoin each month as well. A note on Australia. Before we finish, a note on Australia. So I recently posted on my Instagram, if you guys want to go check it out, I recently posted this video that's gone absolutely bonkers. It's gone viral. Let's give it a watch.
I mean, truly, what is wrong with you Australians? You have natural resources that are the envy of the rest of the world. You're the Saudi Arabia of the Southern Hemisphere. You export 7 times more coal than you consume, and yet you don't want to burn coal. You have nearly 30% of the world's uranium, and you won't build nuclear reactors. You export 3 times more natural gas in the form of LNG than you consume, and you won't drill for gas. I mean, I just don't get it. I love Australia. I think it's an amazing country, but your policy is just baffling.
This video is absolutely going ballistic. 65,000 views. Here is what I wrote in the caption as well. Australia, the richest country, begging for fuel. What is wrong with us Australians? We're being told to work from home to save petrol. Let that sink in. We sit on the world's largest uranium reserves, 28% of the global total. We are the top 3 LNG exporter. We are a top 3 LNG exporter. We have 200 plus coal deposits across the country. We export 85% of the energy we produce, and we're rationing fuel with 36 days of supply in the tank. Here is what decades of ideology over strategy did to this country. We went from 8 oil refineries to 2. We import 90% of our refined fuel from South Korea, Singapore, and Malaysia. Refineries that themselves depend on Middle Eastern oil flowing through the Strait of Hormuz, the same strait that Iran has now blockaded, put a toll booth on. Over 100 petrol stations recently in New South Wales ran dry. Diesel, the lifeblood of agriculture, freight, and the economy, is in a crisis. Farmers can't fuel their machinery. Meanwhile, we banned nuclear power despite holding 1/3 of the world's uranium. We let state governments impose a patchwork of mining bans that keep deposits dormant while Kazakhstan, Canada, and Namibia eat our lunch. We never built the IEA mandated 90-day fuel reserve. We haven't met it since 2012. Most IEA members hold 140 days. We hold 50. We had the resources to be the energy superpower of the 21st century. Instead, we exported our wealth, dismantled our refining capacity, banned our own nuclear fuel, blocked our own miners, and left ourselves completely dependent on the foreign ships, foreign refineries, and foreign goodwill. Don't we look ridiculous now? One conflict and Australia's economy is on a countdown timer. This isn't bad luck. This is what happens when a country prioritizes ideology over sovereignty, when changing the weather matters more than keeping the lights on and the trucks moving. The solution was always sitting underneath us. We just weren't allowed to dig it up. If you go and have a look at the data on all the climate shit as well, we're now starting to see some incredible things. The pollution that coal burning was actually creating was creating a smog layer that was blocking the sun from heating the ocean. Now that smog layer has moved, the ocean is now heating faster. So the sun is now heating the ocean faster and causing global warming because that smog layer has been removed. I mean, the fucking irony of that. And yet people will shout at me in the comments that, oh, I'm sorry that our environmentalist view doesn't suit your capitalist. It's not about capitalists, guys. It's about sovereignty and security. Okay? It's bonkers. Go and look at the data and you'll see it. I think next week I might do an episode on Norway and their $2 trillion sovereign wealth fund. And this will be a case study of what we should have done many years ago to make ourselves independent and to make ourselves one of the wealthiest nations in the world. We missed that opportunity. And as they say, the best time to plant a tree was yesterday, it was 20 years ago. The second best time is today. And so we need to get on it. Okay, we need to get on it. Yeah, the EIA confirms that 17.5 billion barrels of recoverable oil in Australian shale basins, 43 years of fuel security, is sitting undeveloped. Woodside and Santos just became critical global LNG supply to the market that lost a chunk of Qatar for 5 years. So, Qatar 17% of Qatar's LNG is now offline for 5 years because of the attack that Iran made on them. So, I continue to be bullish Woodside and Santos. Our greatest vulnerability and our greatest opportunity. We need to we need a structural reiterating restrained energy, not a war trade. The conversation about energy sovereignty needs to start before the crisis forces it. This is where the oil is. Right? It's incredible, guys. This is what we need to be focusing on as a country. We shouldn't be in the position that we are today. It is fucking wild. It is fucking wild. And, again, next week, I think I'll talk about the case study of what we should have done, because I want more people to be informed. You've just seen Pauline Hanson turn South Australia orange. Yet we need to be putting pressure on our politicians to look after us more at home. All right, so I'm going to take us out with a video that I posted a while back. I think it's a cracker.
Future looks like regarding electrification and battery electric vehicles in your mining operations, then?
Well, we have coal because we've got the biggest coal deposits in the world, but we're not allowed to burn the fucking stuff, so the world's rooted, really. It's all right to be idealistic, but you also have to be realistic. And until the lights go out, the idiots that want to be green on everything and not do mining, not do coal, not do anything, they're going to have to go back and use candles and live in tents, and then they'll no, you might fucking laugh, but it's true. You understand what I'm talking about? I'm not talking bullshit, I'm talking reality. If we don't get realistic, we're fucked. It's as simple as that. We're not allowed to use uranium. We've got the biggest uranium deposits in the world in Australia. We're not allowed to mine the fucking stuff. So it's all fucked. So when half these cunts die, well, the world will be a better place, and then those of us that survive will get it going again.
Well, yeah, just that's an no.
My next door neighbour, I was talking to him. He's a lawyer, so he's not an idiot. Well, he is a fuckwit, but that's another problem. But he said, that's right, you just put plugs along the highways. I said, but if you haven't got a fucking source from a power station, plugs on the highways aren't going to do jack shit, right? Do you understand me? The people don't understand. They think the electricity comes out of fucking space. But if you haven't got a charging system, which is a steam coal burning power station, how the fuck can you charge your batteries? Do you understand that?
Yeah, I understand.
Well, there's a lot of the cunts don't, and that's the problem with the world.
Thank you so much for your time and enjoy the rest of your visit.
If anyone knows this guy, please put me in touch. I'd love to get him on the podcast. In all seriousness, it's when the lights really go out, people might wake up to how the world actually works. And I think that's what's happening. People are starting to wake up to how the world actually works. For 5,000 years, this is how the world was. The last 50 years of peace were an anomaly. And we're now moving back to how the world was. And, we said this back in July 2025. Okay? So I'll leave you with that, guys. Stay plugged in. Stay sovereign. Like and subscribe. Send it to someone you think might find it useful. And I'll see you guys next week.
This ain't a flex. It's a war on your capital, your time, and your mind. Mayhem in motion, that's the open bell. Markets run red while the headlines sell. They hedge the crash while you chase the climb. Smiling on screens while they buy your time. The algorithms don't fade, it was people fade. Every tap's a contract, every post is played. You ain't broke cause you're weak, you was born into theft. A system that profits when there's nothing left. This ain't fall flash, I'm stacking the last. Protecting my blood from a digital past. Bitcoin ain't hype, it's defense by design. A firewall built for the family line. There's fire in the wire, smoke in the street. We spin the wheel while we grind to eat. But I keep my holds clean, my cold tight. Stack around solid while they chase likes. They sell you status, but the price is steep. Your clicks are currency they never keep. You scroll for hope, but the screen's a mask. Designed for dopamine and corporate grabs. No trend chasing, I chart my course. Don't ride waves, I study the source. Truth lives quiet in the cracks and codes. And silent legends where real ones load. This ain't for the gram, it's war prep tech. Resilient minds cashing out of the wreck. Indestructible roots forged deep through flame. I'm building my exit from a rigged old game. There's fire in the wire, smoke in the street. We spin the wheel while we grind to eat. But I keep my holds clean, my cold tight. Stack a real falling while they chase lights. There's fire in the wire, smoke This ain't loud, it moves like a ghost. Inside your habits, in every post, they sell mayhem, wrapped in design. But I see the rot in the bottom line. I don't just spend, I allocate. Every choice I make is a firewall gate. This ain't rebellion, it's math and steel. A Norman mind with a sovereign will. Indestructible ain't loud, it's built in silence.